Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. About to go live in about 2 more minutes. 2 more minutes. One more minute, one more minute. One more minute, guys. About to go live. One more minute. Hey traders, welcome back. This is Lewis with Forex Tech Magazine. Hope you guys are doing well. Hope you guys had the opportunity to make some money yesterday, and hopefully, we have the opportunity to do it again today. Okay, so oops, let me turn this music down. That would help, right? All right, guys, that's a little bit better. And before we get too far along into it, I just want to make sure everybody's tuned in. Let's see here. As usual, I'd like to give our disclaimer. Disclaimer is that although I have the license to be, although I have the license and I'm a licensed to be able to give you advice on financial instruments and to help you invest your finances. That is not what this show is about. That is not what this company is about. That's not what this blog is about. What we are about is a entertainment and educational purposes only. Okay, so we're not here trying to give you advice on how to invest your finance or how to be invested for your financial future. If you're looking for that type of advice, highly recommend that you go out and seek the services of a licensed, competent advisor. Okay, so now that we got that out of the way, let's get into why you tuned in, and that is to talk about what went right, what went wrong with our trades from yesterday, right? And if you guys remember, yesterday we looked at potentially putting on 3 trades. We looked at doing the Great Britain pound, Japanese yen. Looked at the Great Britain pound, U.S. dollar, and the Great Britain pound, Canadian dollar, I believe. Right. Well, the let's just jump right into it with the Great Britain pound, Japanese yen, and you can look at the chart here. And you see our numbers. You see where we had our entry points at, stop loss points, and our take profits, right? Needless to say, with this particular one here, our entry never got triggered, surprisingly enough, right? You see, here's our entry point right here, the black line. The red line is our stop loss, and then the green line is our take profit. And so what happened was with this one right here, after the 3 o'clock candle, we went ahead and got in, and it immediately went down through the stop loss, and because we were not in a position, you know, nothing happened. We just went through the stop loss, no biggie, nothing happened, no money lost, no money made, no money gained, right? And it just kind of hung out down here all day, and now we're kind of back up here, right? But I've already taken the trade off of the table. I took it off earlier yesterday morning. Once I saw that it was, went through the stop loss, and then like it had any chance of coming back up and actually being anything. So I went ahead and took that one off. And it happens sometimes. You come in and you have an idea as far as what you think was going to happen, and it totally goes the opposite direction. One of the reasons why we got into this trade in the first place, just kind of like looking at the trade, it seems like, if I'm not mistaken, with this one, this currency pair looked like it was doing kind of like a sideways motion. Yep, exactly right. That's what it was. And if you notice, it was kind of, hitting support, going up to resistance, coming back down to support, hitting resistance, coming back down to support, hitting resistance. And so the thought was that it's coming back down to support. And then from here, yeah, we may get a little bit, but it should come back up again and go on, touch back up to resistance, right? So that's the reason why we put this trade on. Didn't work out yesterday. Perhaps it'll work out today, considering the fact that it did go through support, right? Came back up, support changed into resistance for this particular pair. Went back down again, was able to break back through it. And now it's on its way back up to actually hitting this real resistance up here. Oh, I don't say real resistance, but hitting this other additional resistance up here, right? So it may be an opportunity, something we will definitely revisit here, at 4 a.m. once we figure out what's going on with this candlestick. Let's just see. How many pips away is that right now? It's 64 pips. That's not bad, standard lot, that's $649, right? Potentially. And yeah, that might be something we do. Let's see here. The other ones that we were looking at, oh, sorry here, guys, need to plug this in real quick. All right, so the other one we were looking at were the the pound US dollar and the pound Canadian dollar. So let's look at that one. Yeah, okay, so cool. All right, this right here is the old one. Look at his entry order right here. This is this is not the current entry order. This one's actually an old one that I didn't erase. That's the other thing, folks. Make sure you clean your charts up. If you're going to be trading, don't have old information on your charts. Don't have old trend lines or old whatever, anything that you're not using, old indicators. If you're not using it, if it's not relevant to what you're currently doing, just get it off of there, okay? Don't want to trip yourself up. Let's see here. All right, so let's look at this one. This one right here, we had an entry at 1.29817, right, which is here, the black line, right? These colors, the way I got this color coded, this is the way it's going to always be for my trades. So when you watch my show, just kind of get used to, black is being the entry, red is being your stop loss, and green is being your take profit. Okay, nothing big, but just so you get used to it. Okay. I just do that because it's simple for me and it gives me some kind of consistency. Okay. So stop loss was at 1.3016, which is here, the red, and then the take profit was down at 129.267, which is down here, right? And then the 3 o'clock candle, which is here. Right, and this is a little bit different from the one we just looked at. This one right here actually hit the entry point, like within that 4 o'clock hour, that 4 o'clock window, right? So immediately after we went in and put the trade on, within that 4 o'clock window, price got triggered, right? And it went down with pretty good momentum, right? All the way up until about 6 o'clock yesterday, right? 6 a.m. this thing started to U-turn. And what I did is after it went through our price entry, one of the things that I did is I went and I just moved my stop loss down, right? Because what I wanted to do is I wanted to have a risk-free trade. Because what I did not want to happen is for this right here, which occurred, which is to start taking a loss again, right? Whereas price went down, did a U-turn, and if I would have kept this position open even up to now, we'd be at a loss because the price is steadily moving back the opposite direction. So that's one thing to remember too as well, because there's no guarantee, even with the best strategy, that you're going to always be right. It's not, no strategy is 100%, but when you can protect yourself and save yourself, you want to do so. Last couple of days though, I've been just kind of reluctant because I want to play around with the some strategies a little bit. I want to kind of just show you some examples of you taking some losses and getting you to understand that, hey, if you take some losses, there's some things that you could have done to prevent it. Like you could have had adjusted your stop loss in the opposite direction, right? Which is the wrong thing to do, right? In my opinion, is when you go and say, well, hey, you know what? This thing is look like it's about to hit my stop loss, so I need to bring my stop loss out more to give it more room to breathe. There's going to be situations where you're going to do that, but typically that's going to be when you initially take the position, not while you're in the middle of the position, right? Because remember, when you're trading these currency pairs, a lot of it just comes down to momentum, direction and momentum. If you can figure out what direction the currency pairs is going to be traveling in, and then you understand the amount of momentum that pair has, then you pretty much won the battle. It's just a matter of just where do you get in at, where you get out at, right? And one thing about this right here, the momentum early on was down, right? It was going down, and we had our take profit, in place, but it changed, right? Did a U-turn, and now the momentum was he wanted to push up, right? And so if I would have went and said, you know what, I'm not going to adjust my stop loss to make this a risk-free trade. I'm just going to leave my stop loss out here. And then what most people do, they'll see when the price goes back through where they originally put the entry at. And what do? They come up here and they start adjusting their stop loss, right? Because they say, oh, I just need a little bit more time. It's going to go back down. I know it is. This whole thing's been going down. And, just whatever. They'll look at another time frame and they say, oh my goodness, see, look, it's a 2-hour time frame. This thing's been just going down, going down, going down. All I need to do is just adjust my stop loss a little bit and then just wait for the market to turn back around in the right direction, and then I'll make a profit. The problem with that logic is you don't know when the market's going to turn back around or if it's going to turn back around, right? And the other thing is you don't have an infinite amount of money, right? When you go in and you take your position, you're using leverage, right? So it's not like a 1-to-1 ratio for every dollar you put in, you trade $1. No, usually every dollar you put in is a multiple, of multiple dollars that you get to control. And that helps as far as allowing you to be able to build up capital if you're going in the right direction. It hurts if your currency pair is going in the wrong direction. And so the farther along you stretch out that stop loss, the more potential you have to get what they call a margin call, where they say, well, you know what, sir, I'm sorry, or ma'am, you don't have enough money in your account to be able to cover the amount of losses that you're incurring right now, because we require that you have X amount of dollars in your account, and if we close your account right now, your dollars reserved are not going to meet our requirements, right? And so once again, you get that you blew up your account, right? So in order to avoid that, and that's the reason why I did what I did yesterday, which was showed you the benefits of using the stop loss, right? And I also told you that, okay, hey, our account was down a little bit, but that's okay, right? Because Everybody experience losses, right? I don't care how good your system is. I don't care how long you've been trading, and I don't care, how big of a hot shot person may be, on the other side of the table. They've experienced losses, and they're going to continue to experience losses. It's just a part of the game. Um, what you don't have to do though is experience unnecessary losses, right? Or an exorbitant amount of money to be lost, right? So the one thing that we control in Forex is our losses, right? We can't control the market direction, right? Market's going to go where the market's going to go, right? We can't control the timing of the market. We don't know when the market is going to go in the direction it's going to go, and we don't know how long it's going to be there, right? So when you start thinking about that type of stuff, that 90% of the stuff that happens in Forex you got no control over, and then you start thinking, well, what are the things that I do have control over, right? And then that makes you start thinking and say, you know what, I really need to grasp that understanding and control the things that I can control, and stuff that I can't, don't worry about it, right? Make sure I just do what I'm supposed to do. And the ideal is that if you do what you're supposed to do, yeah, you're going to take some losses, but you're also going to have some wins, and that's going to keep you in the game long enough for you to be able to start turning a profit and be a successful, consistent trader, okay? And once again, trust me, folks, if I can do it, you can do it, okay? I'm probably, once again, the textbook worst trader in the world when I first started out. Made every mistake, every bonehead, idiot mistake you could think of to do first starting out, right? But over the years, over time, learned my craft, perfected my craft, got better at it, and now I'm able to talk to you and feel comfortable enough to talk to you about it, and to, like I said, offer services to be able to help folks. If you're not comfortable with it and you need some more, a little bit more coaching, a little bit more direction, just to try to, get a better feel of it. Okay. Also, too, I just want to tell you guys, just want to mention again, and I talked about this the other day. There's a ton of information that's out there for free on the internet, right? Take advantage of it. Okay. I get people all the time talking about they want somebody to manage their accounts for them. I'm not managing anyone's accounts other than my own. And really, when you think about it, the knowledge is out there. You can manage your own account, right? Just try it. Try it with a demo account, right? Get good, consistent with one little strategy like what we're doing right here on a demo account. Just practice it, right? And then when you feel like you got some consistency and you've been doing it pretty good for a while, move up to a real account, right? Then trade with some real money, and then you don't have to go all out and trade with your life savings. Just trade with $1,000 or $2,000 or whatever that you feel comfortable with. And if you don't feel comfortable with that, you have mini and micro accounts where you can trade with $250 or $20 or whatever. Just small little amounts that it's not going to be life changing if you lose it, right? And it's not going to be life shattering if you double it or even triple it, right? But it's something that will get you in the habit of winning and get you in the habit of earning consistent profits in Forex. And the other thing to remember too, while we're talking, while we're on the subject, is that this is not something where you have to make money every day, okay? I see so many people tweeting out, or either these different, Facebook groups, whatever, and they're talking about, I made 30 or 40 pips a day, or I made 90 pips a day, or whatever it is that they're making. And they're talking about, just straight profit, straight profit, straight profit. And I look at it and I say to myself, that's crazy, because a lot of these people are over leveraging their accounts, and they're taking such huge risks to be able to get this money and try to make this, whatever they can every day. And I can almost guarantee you, I'm going to say guarantee, but I feel like I can almost guarantee you that they probably have multiple accounts. Some of them are real, some of them not. And they're only showing you the account that actually made money that day. They're not going to show you the other 12 accounts that did not make any money, where they lost a good chunk of what they had. And why is that? Because they're trying to sell, services, they're trying to sell an idea or whatever. And the reason they do this, and the only thing I can really think of is that, majority of the folks that's out here that's talking about forex or talking about day trading or whatever. These are people who are either currently working a job or have worked in a job for many years, right? And there's nothing wrong with that. It's actually a good thing to be able to get out there and work and better earn a living for yourself. But there's a certain mindset that comes with working, right? For someone else, and that mindset is that every day I gotta earn some money. That's why I gotta go punch the clock. I gotta go in and make my 8 hours today. All right, if I don't got my 8 hours, then maybe I got some sick time or vacation time I can use to kind of make up for that. But I gotta have my whole check, so I can get paid. So that way I know exactly what I'm gonna get paid, and then at the end of the week or the end of the month or end of every 2 weeks, whatever, I get that check, and then I can go out and pay my bills and have money left over to go party or whatever, right? That's that worker's mentality. And they bring that same worker's mentality over into Forex. And that's where they say, well, hey, you know what? This is what I made today. Yeah, I made 10, got 10 pips today, captured, scalping, Hey, I went in and I made, 40 pips today or whatever. And the reality is that if you're a business owner or you are someone who's, entrepreneur, you understand that it's over time is how the money is made. You might go 2 or 3 days and not make anything. You might go 2 or 3 weeks and not make anything, right? Then all of a sudden, you get that one sale, that one transaction, that person that you had been, working on for the last, 2 or 3 weeks or whatever, finally comes around and they make a decision and say, hey, yeah, I'd like to go ahead and buy. And when you close that deal, guess what? Now you got enough money for the rest of the year, 6 months or 3 months out of the year, right? Because you understand that the money is made over time, right? It's not made by time. What I mean by that is you're not getting paid by the hour when you're an entrepreneur. You're getting paid by your ability to be able to solve problems, to be able to help people in their situations. And so for that, it may take a while for it to occur. So when you think about that, you relate it over into Forex, you relate it over to trading, same thing, right? You're trying to solve a problem. The problem is you're trying to figure out, what direction is price going to move, right? If you can understand what direction price is going to move, where it's going to move to, those two problems, right, then you get rewarded. You're not going to always be able to do it. And when you don't do it, you don't make any money, right? Or you may start out making money, but then you may take a little bit of a loss, right? Same thing like if you take a client out for dinner, you wine and dine them, and you say, hey, I think this deal is going to go through, and then you call them up to get ready to, bring the contracts and everything over, and then they say, maybe not so fast, decide to go with Jim Bob, right? So now the money that you invested into that client is kind of lost. Same thing if you get your price entry, start working through it, and next thing you know, the price pulls back, hits your stop loss, you're out. Just out of the money, okay? It happens, but don't worry about it. So anyway, those are just my two little, rants for the day. And let's get back to this and get back looking at this currency pair. So anyway, with this currency pair, let's say we made a U-turn. Had I stayed in it, had I not moved my stop loss down, right, make it a risk-free trade, we would actually be upside down in this trade at the moment. But we're not, right? We didn't make a ton of money on this right here. Just, fractional what we should have made. And that's once again because when I moved the stop loss down, I didn't move it deep. I just moved it pretty shallow, just because I wanted to make sure that if price came back around, that I'd make something rather than make nothing or be in the red on that trade. Okay. Now, how could this trade have been better? Like, how could we have made more money on this trade? Well, because if we look at where the price started the U-turn at, and we look at where the take profit at, it's a little bit of a gap there. Let's see how big of a gap that is. It's a little bigger. Wow, folks, we were within about 12 and a half pips. So this kind of falls in line with what we've been going through over the last couple of days. If you remember yesterday, I think it was like 1 or 2 trades there too. that we had that we were right there. You know, it was less than 5 or 6 pips yesterday. We were right there at the take profit, but for whatever reason, wasn't able to hit it. So one of the things I think that we're going to do tonight, or this morning rather, is we're going to lower our minimums. Because right now I've been doing it at about a 50 pip minimum for us to be able to hit. But I think what we'll do, if we take it back from 50, maybe we bring it to, I don't know, let's say 40, 45, something like that, 35, I don't know. Something. And actually that was more than 50. Yeah. All right, so yeah, here's what I'm gonna do. I'm going to about 7. Yeah, so what I'm gonna do this because I was doing it from the tip, from the wick, and so what I'm gonna do is I'm just go back to the actual candle close, right, and just do 50 from there, right, on all our trades. And I think that that will ensure that we're where we need to be at as far as we're making profits on these trades. Now, there's no guarantee, but you know, this is part of the process, and this is what I'm trying to get you to understand. And so what I want you to understand is that, you know, learn the basics, right? Get the basics down, right? Understand the basics. And once you understand the basics, then you'll know how to go back in and reassess your situation, right? When you start seeing that you're on a street where you're not really hitting the targets like you want to, you're having some issues as far as, you know, with your trading technique or trading strategies. You know, if you understand the basics, then you can go back in and look at what you did. You know, think about what went right, what went wrong, just like I'm doing, right? Walk yourself back with the trades, analyze the trades, and see what you can do going forward to kind of improve upon your trades, right? The first one we looked at, you know, with the Japanese yen and the Great Britain pound, we know there's nothing we could have done on that one because it just, you know, it never even, you know, hit our entry price. It just immediately kept going down, just kept going down, right? Maybe we should have just had it going down, but looking at the situation, look at the where it was at, you know, in relation to support and resistance, you know, I would make the trade that I made. I would make the same decision that I made earlier, you know, 9 times out of 10, right? Because I just think it was the right decision, and that's just based off of my experience as being a trader. Perhaps your, you know, experience is different, and perhaps you might would have did it differently, you know. And if you would, that's fine. All right, that's what makes trading so much fun, is because, you know, you can get, you know, 2 traders in the same room, and they can be looking at the same exact chart, right? And one says it's going up, the other one says it's going down. You know, who's right, who's wrong? I don't know. Put the trade on. Let's see. Okay. Everybody has their opinion, and everybody has their, you know, their reasons for their opinion, right? Only way we're gonna know what really works is we put the trade on, and then see where it takes us. Okay. All right, so that was the Great Britain pound. We made some money off of it, didn't make anything off of it, and we'll go over to what we made in just a minute. It's not really much today, but you know what? Hey, rather take some profit and take a loss. Let's see here. So the next one we're gonna look at is the Great Britain pound, Canadian dollar. Boom, boom, boom. Now this one right here was one that I gotta go back, and I really need to. This was a live account. I'd really be. I'd be pissed, and I'd be, you know, talking to some folks right about now. This one right here, same scenario, same setup. As far as, oops, I didn't put my entry in here. Hold on a second, folks. Let's see. Entry was. All right, so here go our numbers. The entry was supposed to be at 1.66472. Stop loss was going to be at 1.66870, which is the red. The black is the entry. And then the take profit is going to be at 1.66010. Okay. So we're looking at a stop loss, we're looking at an entry, and then we're looking at a take profit. Folks, we can clearly see here at the 8 o'clock candle wick where the candle came down and not only touched, our take profit, but actually went through our take profit and then went on to continue upward, right? We should have ended up in the money right here, right? With this one right here, though, however, it touched but didn't take, and it kept going. In a situation like that where you feel like something, whereas if it ever happens, you feel like that, hey, you know what? There's an error on the on the opposite side of the ledger. Definitely call up whoever you're using, call up the company, let them know what's going on. Get that corrected. Don't let anyone take your money. I mean, it's happened to me before in the past with some other companies. And immediately what I do is I call them up. And most companies are pretty good about it. They'll call, they'll respond and say, okay, this right here happened. It was a glitch in the software or whatever. And then they'll go back and give you the credit for it if it was a mistake. If there's not a mistake, then of course you're not going to get anything. But like I said, most companies, if they see that it was an error, they're going to go back and try to correct it. There are some companies out there, though, that if there's an error, well, good luck trying to get your money back. And that's why it's very important to kind of vet whoever you use. So even though we recommend this software here, Smart Trader software, we tell people, say, hey, if you're looking for a really good software to use, especially if you're trying to learn Forex, or even if you've been in Forex for a while, you just want to make it a little bit easier on yourself, try this software. It's still a good idea for you to vet them yourself, look into them. We love them. I think they're great. I think they're awesome. Even with this one mistake right here, I don't really count it as much because I would just do the same thing I would do if anybody else made a mistake. Just go in there, call up customer service and tell them what's going on, screenshot on my my account, and then that way they can go in and they can see the order that you have in place. They can see the order that you have in for your stop loss, the order you have in for your take profit, your entry. They can see all that stuff, and they can also see where the currency pair has been over the last hour, day, week, whatever, right? All that stuff is on record, so there's no dispute if something happened that you didn't get credit for. Okay. And also it's a good segue now. So yes, I recommend you use the Smart Trader, right? Live trading charts. We are, and just FYI, full disclosure, we are an affiliate of this company, so we will get paid if you do go in and you purchase the software. However, there's a free demo version that I'm using right now. Once we go live, we will switch over to the live version. I'm using the demo version because I want you to come in, use the demo version as well, get used to it, walk you through it, show you how it works, how well it works, and be comfortable with it going, into using the live version. Okay. And once again, that's one of the ways that we get compensated here for the work that we do, trying to help people become better traders, just trying to help people become educated about the market itself. So if you can't afford to do it, please, by all means, do it. And here's the other thing too. If you're serious about trading, right? If you're serious about trading, if trading is what you want to do. If you see, trading with Forex or whatever, or stocks, options, whatever it is that your thing is that you like trading, if you see it as a option for you to have financial freedom, if you see it as an option for you to be able to give back to your family, if you see it as an option for you to be able to have a life that you always dreamed of, or a life that your family always dreamed of, right? Why not invest, right, in yourself, right? Invest in your learning, invest in the equipment that you're going to be using, right? So that way, hopefully it can speed up the process for you and make you a better trader. So that way you can go out and have that better lifestyle sooner rather than later, right? That you can go ahead and provide for your family sooner rather than later. Also, too, along with this, and I forgot to mention it earlier, go to our website. If you haven't been to our website yet, I know a couple of you have. I've seen, where you went in, you downloaded the free training course. Go ahead and get that, man. Even if you're already an experienced, trader. And the reason why I tell you is because that course that we have there is a free course. Folks, I can't tell you how valuable it is to be able to get these free online courses, this free information. And you don't have to just stop at my free course. There's other people that's offering free information, right? And mine is a legitimate free information. Like, legitimately, I'm giving you the course that I created last year. And I'm giving it to you for free, right? And there's, it walks you through the whole thing about the basics, walks you through fundamental analysis, walks you through technical analysis, and then it gives you a trading strategy that I'm not using here, right? Giving you a trading strategy that you can, put to work immediately, right? Based off the information that you gain through the course, right? So, you can't beat it, right? So, like I said, it's forextechmagazine.com. You see the URL up there in the upper left-hand corner here on the screen. Check it out. And also, too, we're on social media, so if you guys, looking for some motivation or something funny, check us out on Instagram. If you're looking for news updates, little tidbits about, some potential moves in currency pairs, sign up for our Twitter feed. And we're also on Facebook, too, so if you get an opportunity, come by on Facebook and like us and follow us. All right, love to hear from you guys. And also, too, we have a podcast that we broadcast out on Monday, Thursdays, and Fridays. If you have any subjects or if you have anyone that you want us to kind of interview or talk to, please send us a note, send us a line, let us know. All right, and we try to get that on for you. Our goal is to be as informative as possible and to really just be a resource for you. And I think I said this a couple of other times as well, is that, the last thing you guys need for me to do is to give you advice on how to do anything, right? My job and my value to you is just to help you be able to understand what's going on in Forex, all right? So that way you can make your own decision as far as what you want to do, all right? Once you understand the basics and you understand, where your support and resistance lines are at, you understand where, how to use a Fibonacci, you understand, how to draw trend lines. You understand all this stuff. You understand these indicators, RSI, the MACD, and all this other stuff. Then you can go in and you can trade without me. You don't need me to sit there over your shoulder every time you make a trade. Maybe when you're first starting out and you're still learning all this stuff, you may want me to kind of come in there and help coach you along, which is what I do for folks. Is I just coach them along, kind of talk to them, making sure that they're understanding what they're doing, right, and making sure they're going through the basics and that they have a solid understanding and that they're trading with a plan and not just by the seat of their pants, right? If I'm doing that for you, I can be doing that for you. But for the most part, if you understand the basics and you have this stuff down pat, you don't need to pay, $12,000 for a system. You don't need, these robots, whatever, expert advisors, whatever, to come in and to put trades on for you and stuff. You don't need to do all that stuff. All you need to do is sit down in front of your computer, pull up your charts, analyze the situation, and then make a decision. It's just that simple. Trust me, it is just that simple. I don't care how hard everybody else try to make it seem it is. It's not that hard. It's very simple. It's about consistency and discipline. Okay? So anyway, with this currency pair, it did not hit. What I did, I went in and I brought down the stop loss, right? And I did exactly what I did in the other one, which is I said, well, we're going to make something. We're not going to just not make anything at all. We're going to make something. And pull down the stop loss and turn it into a risk-free trade. And we made, just a little something. Once again, not a lot. you know, but we made something enough so that we're back in the green today, right? So, which was good, because if you look at how this pair continued on throughout the day, now, this then went back past where we entry point, and is actually about to hit the stop loss. So if we would have stayed into this trade up until now, definitely would have taken a loss. Definitely would have taken a loss on this right here, right? But once again, we made sure that we took some type of a profit, even though it wasn't what we wanted, but we made sure we took it. Okay. So let's. Okay, I'm gonna one last one, which was the Great Britain pound, Japanese yen. I think we already talked about this. I can't remember. Sorry, it's one of the bad habits of getting old or getting older. Sometimes you can't remember stuff, but we just talk about this again, just in case. This was like entry point. Yeah, we did talk about this. Yeah, I just thought about this. Yeah, entry point. Just remember that candlestick entry point. Went down, went up, went down, going back up. Yeah, no need to talk about this. Let's get out of here. All right, so let's look at where we're at. All right. So once again, we're profitable. All right, $63.57 to the good. Right? Yeah, $63.57. Yesterday, I think we were negative $62 and some change or whatever. And like I said before, you know what? Losses are going to happen, right? You can get the money back, right? The worst thing you could do is go in and do a revenge trade, right? Or you're going to go in and, I'm going to make this money back at all costs. And you go in there, and then what happens is you wind up losing everything and then some, right? Because you're making an emotional decision when you should be using logic, okay? If you ever do have losses, or no, I'm going to say ever do. When you have your losses, do me a favor, do yourself a favor. After you have the loss, just get up from the monitor, man. Get up from the monitor. Go outside. Go for a walk. Go for a drive. Go for a jog. Whatever it is. Go lift weights. Whatever it is you need to do. But just get away. Just shut the computer down. Just go someplace, right? Go take a break. Clear your head, right? Once you come back with a clear head, then look at your trade and try to analyze it and see what went right, what went wrong. Okay? Then look for, another possible re-entry or something. But don't do it immediately, because all you're going to be doing is revenge trade, and you're going to be trying to jump back in and make money that you lost. And 9 times out of 10, you're probably going to make the wrong decision, right? Because you're going to be emotional. It can be a very emotional thing, watching your hard-earned money just disappear, within an instance, because some news feed came out or a tweet went out or something happened, and all of a sudden the market just turns on a dime, goes the opposite direction, and now you're sitting back, feeling the fire, so to speak, because your money's gone, right? And it ain't coming back, right? The only way to get it back, you gotta go out there and win it. You gotta remember, the market is a zero-sum game, right? Somebody has to win, somebody has to lose, right? You never want to be on that losing seat too many times, because then you won't have an account to try to trade from, right? So if we follow the basics, right, we practice good risk management, right? There's really no reason why we shouldn't come out on top, right? No reason why we shouldn't come out on top. I mean, this is a demo account that I'm using. It's not even a real account, right? But what I'm doing is I'm making sure that my trades I'm not putting on a ridiculous amount of money for my trades. I mean, I could easily come in here, and margin off, $20,000 or $30,000, use $20,000-$30,000 a margin per trade. But what happens when I take a loss? Because I can be sitting there thinking, oh yeah, I'll make all this money when this thing hits. I'm gonna make, it's gonna look great. I better sit back and brag. Oh yeah, I made $20,000. On this trade, we made $15,000 on that trade. The only problem with that is what if it doesn't work? What if the trade goes against me? If the trade goes against me, just like I could have made $20,000 or $15,000 on a deal, right? If you over leverage, you can lose $15,000 or $20,000 on a deal, right? You don't want that because those losses are hard to come back from. Okay, one of the things that I used to tell people when I was a financial planner was that, listen, it's not about how much you make in your portfolio, it's how much you actually get to keep in your portfolio, right? Because when you take losses, now you have to your money has to work twice as hard just to recoup from the loss to get you back profitable again, right? So the ideal is to keep your losses to a minimum, right? And try to eliminate them as much as possible. So therefore, you're working from the green all the time. Okay. But anyway, so let's look at how many trades have we put on so far. So we'll say 1, 2. This trade right here is 2,020 loss rate. This is once again it's fat finger. This is your first time tuning in. I didn't realize I had hit the button. Went through and made the trade. I was just looking at some stuff, and then when I realized I did, like, oh crap. So I got out and took $2 loss. Anyway, so we got 1, 2, 3, 4, 5, 6, 7, 8, 9. So we got 9 trades. 1, 2, 3, 4. So 9 trades, and out of the 9 trades, only 4 of them were profitable. Right? So we have a higher losing percentage than we do winning percentage. Right? We lost more than we won, but we're still profitable. Once again, that is the power of Forex. That is the power of proper money management, not over leveraging yourself, making sure that you got adequate reserves in here so that when you take a trade, you're not going in and over trading yourself. And then when you take a loss, 2 or 3 losses or 4 or 5 losses, then all of a sudden, you know what? You can't even trade the same lot amount anymore because now all of a sudden, you know what? You lost so much. You can't get back in. Now you got to take a lower lot size. And if you got to take a lower lot size, that means you got to get even more pips to recover, right? So it's like this really bad cycle that you start going through when you start losing, and when you're trading, when you're over trading your account, right? So manage your lot size. I don't think anybody should be trading with anything over than a standard size lot, right? And depending on how much capital you have inside your account, will dictate, do you need to, go from a $10 pip to a $20 per pip or $30 to pip type trade. And 9 times out of 10, I'm going to tell you no. Just stick with the $10 per pip, make your money, right? And enjoy yourself. Because at the end of the day, how much money do you really need to make off for each trade? Probably not as much as you think. The other part of this puzzle, or the part or the key to this whole thing we call Forex, is compound interest. You see all these gurus and people out here talking, but nobody ever really talks about the whole thing about compound interest. Why is it so important? Why is it necessary? And the reason why it's so important, the reason why it's necessary, is because that's how you grow your accounts. You see these people and they're talking about, oh, I got 50 pips a day, blah blah blah. It's also, you don't have to do it every day, right? But you have to be consistently doing it over time, right? And if you understand that, then you can understand that with the compound interest, the effect it's going to have on your account, that over time, your account is going to grow exponentially. Not linear, but exponentially. See, most people, especially working people with the working mindset, they think about growth being linear, right? But somebody who's an entrepreneur, somebody who's a business owner, somebody who is an investor or a trader professionally, understand about their accounts growing exponentially over time. And that happens with the compounding effect of you going in, limiting your losses, and just able to build on the green that you already have in the account. Okay? So anyway, we're right here at the 347 mark. I think you guys get the idea of what went right and what went wrong from yesterday's trades. What I'm going to do now is I'm going to go ahead and I'm going to start looking at some potential trade ideas for today. And as we wait on that 4 o'clock hour to approach, we got about 12 more minutes for that to happen. While I'm waiting on that, give you guys some tunes to listen to. All right. I'm gonna play around here and see if I can find us some decent pairs to look at to trade today. Okay. Let's see here. So let's say this. All right, guys, we got about 9 more minutes before the 4 o'clock hour, so just kind of hang tight. 9 more minutes before 4 o'clock. And what I'm trying to do is I'm going through and I'm just looking at some currency pairs, and I'll talk to you more about them once I get everything. Ow, this chair hurts my butt. I'll talk to you more about them once I kind of do my little analysis here, and so that way, right at the 4 o'clock marker, we can go ahead and start getting our positions, whether it's going to be selling or buying in these currency pairs. Okay. Got about 5 more minutes, guys. 5 more minutes before the 4 o'clock hour. Yeah, that's right. Got about 3 more minutes, guys. 3 more minutes before 4 o'clock. Two more minutes, guys. 2 more minutes. 2 more minutes. Let's see. One more minute, folks. 1 more minute. 1 more minute, and we are a go. 1 more minute. Boom. All right, less than a minute. All right, guys. So we're good to go. It is the 4 o'clock hour. I think I've identified at least two currency pairs that we want to go ahead and that we're probably gonna take a long position in today. Yeah, take a long position in. Yeah. And what I'm going to do is I'm going to just in an effort to try to help minimize the amount of time that we spend here on the you know, going through the process. What I'm gonna do is I'm going to go ahead and I'm gonna get off. I'm gonna get off the line. I'm gonna go ahead and put the trades in. I'm gonna tell you which one we're gonna do. We're gonna do the Great Britain pound, Canadian dollar. We're gonna be looking to buy there. We're gonna be looking to buy the Great Britain pound, Japanese yen, and possibly looking at a buy for the Great Britain pound, U.S. dollar. All right, I'm gonna put these trades in. Same principle as we always used before. At a minimum, 50 pip push. But when I measure it out this time, I'm gonna do it from the close and not just the end of the wick, because I think we were adding on more before, and that was part of the reason why we're not able to hit our targets. But anyway, we're gonna see. We're gonna make these adjustments. We're gonna see. And what I'll do is I will talk to you guys tomorrow morning, right? And like I said before, if you guys got some time today, before I listen to the podcast, the podcast will be up in SoundCloud as of 8 a.m. this morning. Thanks for tuning in. And I'll put these trades on the books. Remember, we're going to be trading we'll be going long on the Great Britain pound, Canadian dollar, Great Britain pound, U.S. dollar, Great Britain pound, Japanese yen. And I look forward to seeing you tomorrow to discuss how the trades went. Oh yeah, before I leave, I always like to give you something inspirational. This is from the great man himself, Zig Ziglar. And he had a quote that went something like this, which is, if you help enough people get what they want out of life, you'll be able to get everything you want out of life, right? Think about that. Help enough people to get what they want out of life, and you'll be able to get what you want out of life. And I'll go a step further than that. If you get the opportunity today or this week, do something good for somebody who you know for a fact can never repay you back. Just do something good for them, right? Just help them out, right? Be a blessing to them, right? Not only are they going to feel good about the fact that you were able to help them out and do something for them, but you're going to also feel good as well that you actually did something to help somebody else out. Anyway, stay safe. I hope you guys have a winning trades today, and look forward to speaking to you tomorrow. Take care.